Welcome back to the ETF Inspector. It is Saturday, October 4th around 3:45 when I'm recording this, but it's going to air Sunday morning after our Spaces talk on X. So this is our every Sunday video where we do a week look ahead on Ulti and SLTY, the YieldMax Ultra Option Income Strategy Fund, and the short version of it. And we will also make payment guesstimates for the upcoming declaration that will be announced on Wednesday. Reminder, I'm on X at ETF_inspector1. Also, if you're interested in Ulti a lot, the Spaces talks here. If you go to Ambassador of Quan, right, he goes ahead and posts it. He hosts it along with Parabolic Code, and it will be myself, Max Convexity, and ETF Delta speaking all about how Ulti performed this past week, how things are looking moving forward. So it's pretty fun. It's almost kind of like a sports show round table, but talking about Ulti. So if you're interested, it's definitely fun to listen to. And that is tomorrow morning, Sunday morning, 7:30 a.m. Eastern Standard Time. All right, before I get into the video, I'd like to do a shout out. 05 Hoopa gave $1.99 as a super chat while we were talking on Friday night's Ulti and SLTY and LFGY video. So thank you very much, 05 Hoopa. I believe he has given in the past too. I don't think that was a first. So thank you very much for that. All right, we'll go ahead and let's take a look at the chart. Ulti over the past week looks like a lot of moves, but overall ended up 0.18% and also was able to pay out a 9+ cent distribution in the middle of that. So to pay out 9 cents in a week and still be up is always a good thing. It means we can afford to pay that kind of a distribution and hold on to our price. SLTY, on the other hand, that's a completely different story. We might as well look at it now because I'll probably forget before we go. SLTY started the week at 42.90, ending at 40.50, down 5.5%, and a portion of that was their 63, I think, cent distribution. But SLTY has just had the falling knife effect on their charts so far. So obviously the market's been too strong moving upwards for shorting it. Okay, so if you watched any of the other videos before, this one's a little different, right? Sunday videos are much deeper, much more time spent looking at trading ranges, percentages, implied volatility. So this is not the real quick get through it. This is the sit back, grab a snack and a drink, and there's not a lot of funds where you are able to have this level of detailed information on all the trades being made. So if we have the information, we're going to look at it. All right, so we'll start off working on our estimate, but we're going to kind of bounce back and forth. So to do that, we got to look at the trades we made for the week. So for Ulti, over the course of the past week, 9/29 through 10/3, they made approximately 325 trades. Monday, Tuesday, Wednesday, Thursday, a lot on Thursday, Friday, a lot on Friday, a lot on Friday. Okay, so kept all those, totaled them all up. And if we take a look at how they came out on Monday, it came out to a debit or a loss or a negative of 3.8 million. Tuesday was a positive 581,000. Wednesday was another positive 7.6 million. Thursday a negative 46 million, and Friday a negative 43 million, for a total of negative 85 million on the week. So the first goal of it is to just generate enough income options trading to distribute out the dividend each month, or each week actually. But in this case, if you lost 85 million, you can't really distribute out negative 14 cents. So that doesn't work. But what they tell us is next to look to the IV, the implied volatility, to help because that's how they are selling these options based off of being able to collect enough to pay out the distribution. But to get our IV estimate, first we need to take a look at the implied volatility of each of the underlyings or the holdings within the fund. So when we go through each week, I just update the 30-day IV. Obviously, they're not keeping necessarily the 30-day IV. It's just the implied volatility. It's kind of the instantaneous, but we don't have that. So this is just to help us get a close ballpark, and then we kind of make our final estimate from there. So when we go weightings, a lot of people might get confused because if you download the holdings yourself, I think I might have closed it. No. Okay, never mind. I don't have it open. But if you download it yourself, they're going to show different weighting. So I want you to understand if you were going to say how much is a firm out of the entire fund, it would be compared to every single holding. We'd have lots of negatives percentages for every sold option. So the way I calculate it is I just take a firm, the amount of money in a firm, and divide it by the amount of money in the combination of all underlying shares only. That's just how we're finding our weight, okay? So that's going to look different than if you just divided every single number by the assets under management. So a firm is about 2.1% of the money that we hold between the shares, and it increased in IV this past week to 62.3. Before I go too far, let's take a look at what the average would be. There's about a 4.5% average. So a firm is going to come in under that with 2.1. Bullish is under as well with 3.8% of the money. They also increased in IV this past week to 81.4%. Bitmine getting a little closer to the average, 4.1% of the money. 112.3% is a decrease from last week, but that's still a real nice high IV that helps with our calculation. Centene is a new company, Centene Corporation, that we just started a put spread on. Now, I don't have it factoring into my calculation because I need shares and a weighted average to make mine, but I do still write it down just so we have an idea of, all right, so we're getting roughly 64% implied volatility when we're making the trades on these options. Coinbase is greater than average, 6.4% of the money with a 65.5% IV. That's an increase from last week. CoreWeave decreased from last week, but still generally high, 82.3%, and they have 6.5% of the weight. Figma's a smaller one, 2.3%, a little over half of what's in the average fund or average holding. 77% IV is an increase. Galaxy Digital is another one that we just trade put spreads. We don't own shares. It did increase last week, and it is 86.6%. Hims and Hers up into those high numbers. 94% is an increase from last week, 5.4% of the money. Robinhood, 6.6% of the money. A lot of that's just because Robinhood just keeps on going up. I believe we've taken some profits, and it's still a high amount of holding, and it's up to 61.1%. Lucid, this one's fairly new. I believe it got added early in the week, maybe in the middle. Not a huge holdings, 2.3%, but it has moved upward since we added it to 83.9% IV. Lululemon, we're selling put spreads on them. We don't own any shares. They did increase. Kind of confusing why they actually have these in here, but 39.5%. MP was up to 78.9%. They're about 4.3-ish% of the holdings. Strategy, we've got just about 3.9% of the money in there. That's a decrease, but it's still a little higher than it has been for a while. Still in the high 50s, 57.5. Open Door, only 2.5% of our money is in there, and it actually decreased while still staying the highest implied volatility out of all of them, 130.7. Palo Alto is another one. It's kind of confusing why we've got them in here trading options on a less than 30% IV, but it did go up last week. Palantir, almost 6.5% of our money. 55.8% IV is an increase from last week. Pony AI, 2.6% of the money, 91.5% IV. It's a decrease, but anything higher than the average not the average, but anything higher than 85 is obviously going to be helping when the fund seeks to pay out around 85%. Quantum computing, just about 3.5% of the money. That's an increase to 121.6% IV. That's real nice and high. Ooh, did I say Open Door was the highest? I did. I was wrong. Rigetti climbed up to be the top one, 134.2% IV, 5.4% of our money. We've got nice big chunk of money in there. They've been climbing like crazy. Rigetti at $40. I think I remember Rigetti at 14 when I first looked at them and decided not to buy into them. That stinks for me. Rocket Lab, 7.8% of the money. That's another one that's just been climbing. More sad story for me. I sold them when they were like 20 or 21, so don't want to talk about it. They increased to 87.8% on their implied volatility. Rocket Companies, not to be confused with Rocket Lab, 5.3% of the money decreased to 69% IV. New Scale Power still up in the 90s, increased 93.2% with over 6% of the money. Soundhound has 4.3% and increased up to 92.7% IV. Symbotic, 4.4% of the money with a 76.5% implied volatility is an increase. And one more increase to finish it out, 74.9%. Sorry, I think a bird just flew into the window next to me. Got me distracted. 74.9% is an increase with 3.4% of the money. So big picture, 16 of our underlyings increased in implied volatility. That's always going to help with our IV estimate. 6 of them decreased. And then out of our put spreads, 3 increased and 1 is a brand new one, so it didn't really increase or decrease. We stopped with Tesla and we instead replaced it with that CNC. I still can't even remember what it means, Centene Corporation. So overall, our weighted average of our underlyings 30-day IV increased from last week 77.25% to this week 84.32%. So that's a nice increase that gets used along with the closing price on Friday to come up with our calculation. So when we do all of that, we get 8.87 cents per share. So real close to 9 cents. And then we just kind of take the information we've got, take a look at previous payments, right? So we've been 9 for 1, 2, 3, 4, 5, 6 straight weeks. Before that, we had 5 or 6 weeks of 10s back to 9s. So we got to go all the way back to June since the last time we paid under 9 in the 8s. So are we going back there again? My guess is no. I think we're going to get 9 cents or something a little bit over 9 cents, and that will come out to be about an 85.5% annual yield payout. So with paying it last week and ending higher on the week, I don't see why they would drop it. So that's my guesstimate. Next, we're going to take a look at where all of our options sit for the week. All right. So we've started off a firm. In general, Ulti trades a collar strategy. So they're going to buy shares. They're going to protect those shares by buying puts. So that way, if the share price drops, the value of the put increases. That helps to offset because we need some protection. This is a high volatility, high IV fund. Everything in here has the potential to really take off or really drop. So we got to protect that. And then we're going to try to capitalize on that by selling calls. That's the other side of the collar strategy to generate income. Sometimes, like with a firm, we'll also sell puts further below the purchase puts to help pay for them and offset some of that cost. So that's the case here. So a firm has sold calls at 80 with a 6.9% out of the money. So that means basically this share price could increase by like 6.9% over the week. We would get to capture all that increase in our market value without having to pay a ton of money to close out. They would expire right at the money or just below it. So long as it doesn't happen in a rapid fashion, they'll end up expiring worthless. Same thing if the puts, we really actually hope that our protected puts expire worthless. If they have to get used, that means our share price dropped, so it's not a good scenario. It's just our backup plan. So we want a firm trading up to around 80 would be best for us. Bullish 64.81 is where it closed. They've sold calls at 69 and 70, 6.5% and 8% out of the money. Bitmine Immersion at 56.65. They've sold calls at 59 and 61. They're 4.1 and 7.6% out of the money. Centene, this is the first of the 4 put spreads. We don't own any shares, so that's why you don't have that gray line all the way across. Closing at 38.70. We've sold our puts at 39, so we just need it to stay above 39 and we win the trade. Currently, they're below by 30 cents or 0.78%. Coinbase, just over 380. We've got calls sold at 365 and 380. So basically, any upward movement, we're not even going to get to capture any of it because they're already in the money. So every penny it moves up, these will increase in cost to close out. If it sits flat though, they will decrease rapidly because, as you can see, so like a 380 with the stock at 380, they technically are only worth about 2 cents of intrinsic value, but there's $13 and basically 10.5 cents of extrinsic value there. So if the stock sat here all week long, that 13.12 would turn down all the way into a 2 cents. And so that would get much cheaper to close out. We know it's not going to sit still for a week, but just helping you understand. CoreWeave, close to 135. They sold calls at 143 and 145, pretty evenly split. I don't go over it every single time, but if you see this column here it's shares if it's in the gray line with the underlying, it's contracts on options if it is in the white, no background. So 6,000 contracts at 143, 6,868 at 145. They are 6 and 7.5% out of the money. First American Government Obligation Funds, $636 million. We total that up with our cash and other, $88 million there to get our total $725 million. I call that dry powder, but we have to keep some in mind as collateral for those put spreads. So 19 of that is collateral. There's still over $700 million that could be deployed if needed. All right, Figma closing at just over 53. They have $54 and $58 calls sold, and then they have $44 puts sold to help pay for the $47 puts. So those calls are 1.8 and 9.3% out of the money, and then the puts are 17% out of the money, the ones that are sold. Next, we have Galaxy, the second of our put spreads here. We've sold the 35.50 and purchased the 33.50, so it's a $2 spread, but that's $2 times 40,000 contracts times 100 shares per contract is the amount of collateral that you would need to have set aside. The stock's at 36.16, so those puts at 35.50 are 1.8% out of the money. Hims and Hers just over 52.50. We've got plenty of room to run here. Calls sold at 58, 59, and 60 are 10, 12, and 14+% out of the money. So we could have a great week with Hims and Hers as far as increasing our value of our fund without having to pay out a ton of money to close out options. Robinhood, 148.67. They've got 148s sold that are in the money by 0.5% and 152.50s that are 2.5% out of the money. Lucid Group 24.77. They've got calls sold at 25. They're 0.9% out. Lululemon, this is the third put spread that we have, selling the puts at 180 to generate the income. Stocks at 175.59. So this one we need Lululemon to go up like $5 this week. 2.5% in the money. MP Material Corp, $71.50 closing price on Friday. They've sold 77s expiring this week. I should kind of back up everything that I've mentioned so far, and most likely, unless I say otherwise, is all expiring this coming Friday the 10th. MP Material Corp 7.6% out of the money on those 77s. Strategy or MicroStrategy 351.63. They sold 352.50s and 365s for this week. They are 0.25% and 3.8% out of the money. Pretty much evenly split, 1,450 contracts and 1,500. Open Door, this one's been a wild ride. $8.11 is where it closed. They've sold $9 calls. They are just about 11% out of the money. Palo Alto Network, next one here. It's the final put spread. They sold the 207.50 to generate the income. It is currently 0.1% in the money with the closing on Friday of 207.19. Palantir, just over 173. They sold calls at 182.50 and 185, evenly split, 5.5% and 6.8% out of the money. Pony AI, 23.67 close on Friday. 25.50 is the strike price sold. They're 7.7% out. Quantum Computing, 24.62. This one hurts a lot. The $20 calls are already 18% in the money, almost 19. 24.50s are even in the money by 0.5%. So that is a good portion of them, 27,000 contracts plus. But we do still have a couple more 27s and 27.50s with a total of 10,000 contracts between the two of them, 9.6 and 11.7% out of the money. Rigetti Computing, just over $40. Here's another one that hurts. We've sold calls at 36 and 37.5. Now, you might be questioning yourself, like, why in the world would they sell them in the money? Well, they didn't. When they rolled them earlier in the week to next week, they continued to go up after that. So it's not like Rigetti ended at 40 and then we said, let's sell 36s and 37s. No, that's not how it worked. Back when they were below these numbers, they sold up to these numbers and the stock continued to run up past it. But at that point, since there was so much time left, it was going to cost too much to close them out. So Rigetti's starting 10 and 6.3% in the money on those 36s and 37.50s. Rocket Lab, 56.16. Here's another one. Right, we've got 53s and 55 sold, 5.6 and 2% in the money. Rocket Companies closed at 17.80. They sold 19s and $20.50 strikes, 6.7 and 15+% out of the money. New Scale Power, $40.12. They sold 42.50s and 43s as far as calls, 5.9 and 7.1% out of the money. They also sold some $33 puts to help pay for their $37 puts. And so what that does, though, it limits the amount of downside protection, right? So we basically only have downside protection until 33 as opposed to as it continues. So they are 17.75% out of the money. SoundHound, 17.85 closing price. They sold 19s and 19.50s, 6.4 and 9.2% out. Symbotic up 63.10 was the close. They sold calls at 61 and 64 expiring Friday, 3.3 and 1.4%, or 3.3% in the money on those 61s, 1.4% out on the 64s. And finally, Upstart, just under 52. They sold 57s as far as their calls and 46s as far as their puts, 9.7 and 11.5% out of the money. So all in all, assets under management is $3.3 billion. On Friday, there was actually a pretty big drop in outstanding shares, so people selling out of the fund, decreased it by 6,375,000 shares. So our new outstanding shares is 609,500,000. That calculation makes our NAV 547, which is exactly what it closed at. So there's no premium. You're not paying anything extra for it. You're getting $5.47 worth of the money of the shares, of the underlyings per share at that exact price. Most recent distribution, Friday, we all got 9.13 cents per share. And then this is fairly new. I just averaged out I wrote first calls, but the closest call to the money in general in the fund. So we've got about 2.5% of upside before we are capped, but that's an average, right? We've got major differences. If hims and hers goes up 10%, we get to capture all of it. And if where was the next one? Let's say if Rigetti Computing goes up 10%, we don't get to capture any of it because it's already in the money. So that's just an average. And then the average second call, since a lot of them have calls at different strikes, is over 5% out of the money. So before we go to Salty, just a quick recap. Guesstimate for this coming week is 9 cents, maybe just a little over, just so it's not 9 exactly, but I think we're going to be real close to 9 cents. Okay, next we're going to go to Salty. Going to go through it a little quicker. There's obviously way lower amount of interest in it, but it's the inverse. It's cool, so we'll talk about it. So they had approximately 115 trades over the last week. As far as their option trading goes, they had profits every day, Monday, Tuesday, Wednesday, Thursday, Friday, for a total of $658,000 in profits. If we divide that by the amount of shares, that would be a distribution of $1.64. So if everything hadn't tanked and we just made that kind of money, they could pay out a great payment. Unfortunately, you're going to win all your trades when everything you're holding moves against you, because if you sold something out of the money and then it moves the opposite direction, then everything ends out of the money. You get to keep it all. And that's been the case. The share values, actually, hold that thought. Back up. Ulti, we never talked about this. On each day with the trading, the share values obviously moved up or down as well. Monday, share values increased by 33 million. Tuesday, they dropped by about 4.7 million. Wednesday, they went up by 17 million. And then Thursday, through the roof, 137 million. And then Friday, up another 19 million. So there's a reason they were able to lose $85 million options trading and still go up even with making a payment. And it's because everything they held increased in value by over $200 million. So that's the beauty of the way this strategy works. If everything were to trade sideways, then you could make enough in your options trading to pay out and not drop in your NAV. If everything drops, you're going to win all your trades, but your NAV's going to drop because everything you're holding drops. And if everything goes up, you're going to lose your trades like we did, but your values are going to increase so much that even when you pay the distribution, your NAV still is doing well. So that's the case for Ulti. Unfortunately, so Salty is the exact opposite. If they're shorting everything and it's all going up every day, they're dropping value to the tune of 1.7 million. So, and also, right, if they're going to sell out of any of the funds, or technically buy out of any of them, because they start off by selling short to short them and then buy to close them, then you're going to have that factored into the trading wins and losses too. So we do have some of that. We got out of Mara at like 1890 when we got into them at like 14 something. So that's going to go against you. Symbiotic and Tempest. Let's just take a quick look. Yeah, so Symbiotic up 14.5% over the week, 58% over the month or 3 months. So obviously we shorted them at a lower price than we bought them back at, so that's going to take a loss on us. Symbiotics, most likely similar. All right, so next we're going to go to our IV estimate. And since that's a very long portion of it, right, we'll just get through it just a little bit quicker. A Labs increased to 79.8%, just under 80. Bloom Energy increased to 115+%. BitDeer increased just under 114%. Circle Internet Group increased to 86.8%. Duolingo increased to 69.7%. Are you noticing a trend? Nothing decreased over here in volatility. Enphase was up to 88.6. GitLab up to 57.5. Okay, so not everything increased. Nothing decreased though. Iren and Kratos are two new additions this week, so they are unchanged over from the time we added them a couple days ago to now. So they're still at nice high numbers, 103.5 and 71.6. Lemonade was an increase over 80%. Nebius an increase over 92%. RH an increase over 59%. And Tesla just got added this week as well, so that's unchanged from last week, 60.5%. Okay, so all in all, our underlying 30-day IV weighted average increased by over 10% this past week, so 86.06%. We're going to use that along with our closing price on Friday of $40.50. And what we come up with is a 67.03 cent per share distribution based on our IV estimate. From there, we take a look at how everything went, how the share price performed, which, like we said, not well, worse than not well, poorly. So coming up with our guesstimate, and I said 62.5, and if you watched last week, I said 62.5 last week too. So, but it's under different circumstances. So the share price dropped, which should have made the payment drop, but the IV increased, which would make the payment increase. So I think the two kind of canceled out. I'm guessing around 62.5%. That is kind of high. They haven't been paying like 80% annual yield, but their weighted IV is over 80. So I think I think they might get close. If anything, maybe it's between 60 and 62.5. All right, when we take a look at the holdings, Astera Labs, so they're going to do the opposite, a reverse collar strategy. So they short the shares, so they hold negative shares of everything, and then they buy a call, because if that goes up, that's going to hurt. So they buy a call, which will help increase in value just in case they lose value, and then they sell puts to generate the income. Sometimes they'll sell calls to help pay for those protective puts. So A Labs got their puts sold at 197.50, 1.6% out. They also sold calls to help pay for the calls, 23% out of the money. Bloom Energy, 9% out of the money on their sold $82 puts. BitDeer sold puts at $16.50. They're 15% out of the money. They also sold calls at $21.50, 10% out to help pay for them. Circle Internet Group sold their puts at $137. They're 6% out of the money. If you're familiar with Circle Internet Group, it kind of swings that kind of percentage on a daily basis, so those could be in trouble real quick. $180 calls were sold as well, 23% out. Duolingo sold their puts at $307.50. They're 4.7% out of the money. Sold their calls at $380, 17+%. Enphase Energy sold their puts at $35.50, 3.5% out of the money. They sold their calls at $44.50, almost 21% out. I did forget to mention a whole lot of money. What do we got? 13 million sitting in treasuries. That is because we don't actually have any money sitting in these underlyings. We have negative money in them, so we've got to hold the money somewhere, because at some point we got to buy these shares back to get to zero and close them out. But that kind of makes our government obligation funds not as simple to call it dry powder, because it's not like we can put this money sitting aside to work. It's got to be ready to buy these shares in the event that they take off. GitLab sold their puts at 45.5 or 3% out. They sold their calls at 55, 17+% out of the money. IREN, I think somebody said they were a mining company or something like that. Crypto mining. $45 puts are 10.8% out of the money. $60 calls are almost 19% out. Kratos Defense and Security Solutions, $91 put strike price, 5.4% out of the money. $114 calls sold, 18.5% out. Lemonade, they sold their puts at 51 and 53. They're 2.7 and 6.4% out of the money. They also sold calls at 63 and 65 to help pay for the calls at 58 and 61. The sold calls are 15.5 and 19+% out of the money. Nebius Group sold puts at 118. They're 7.8% out. They sold calls at 150, 17% out of the money. RH sold their puts at 202.50. They're 2.4% out of the money. And Tesla, they're selling puts at 415. I'd be nervous to be selling puts on Tesla as high as it is right now. If you take a look at I don't even know where they sit in my my thing here. Yeah, so just over the last month, I mean, 415 scary. If you look at three months, it's even scarier. You look at 6 months, it gets even scarier than that. So I would not want to be selling puts on Tesla right now. But 3.5% out of the money, and they sold calls at 495. Those are probably nice and safe. 15% out. There's $16 million in assets under management. 400,000. Actually, I think I forgot to update that. So people bought into the fund by 25,000 shares, because there was 375,000 before I changed it while I was preparing for this video. So 400,000 outstanding shares makes our NAV. Yeah, that makes sense. Makes the NAV $40.29. For some reason, this one trades at a premium. People are paying about 21 cents more than what it's worth to be in it. I don't understand why, since it's struggling so much, and when Ulti trades right at its price. But most recently, we got 63.46 cents per share on Friday. I say we, I shouldn't have said we. I do not own Salty. It's the only thing that I make a video on that I don't own. And the average first put is 5.8% out of the money. So if things can drop like 5.8%, and we will increase in our assets under management, we will increase in our share price without having to lose money selling or buying to close out our options. All right, that was a whole lot of information for you. Again, quick recap on that. Guesstimate is 62.5 cents. So now we just have our I always forget to bring this up. I use Market Chameleon when I'm looking up implied volatilities. So I always have it ready to talk about, and then I never do. So, all right, I got a dad joke of the day for you. So thank you for watching. Appreciate all the likes, shares, and comments. All the people in the live chat keeping it fun. And since it's fall, we might as well have a fall type joke. You're probably going to know the answer, though. How do you fix a broken pumpkin? With a pumpkin patch. All right, thank you. Hope you have a great day, great rest of your Sunday before you go back to work on Monday, and I'll catch you in the next video.